This is Finance Career Launch, the show that helps you own your career. This podcast is just one component of the Finance Career Launch member community, which provides the training and support to help you develop, contribute, and advance. If you're not yet a member, go ahead and register for no charge by visiting financecareerlaunch.com and clicking that big blue button. When you do that, you'll get instant access to the video series, The 7 Pillars of a Successful Career in Finance. Hey there, this is David Mariano, and you're listening to episode number 68 of Finance Career Launch. If you're new around here, welcome. It's great to have you, and good to meet you for the first time. If you've been around for a little while, you know that I usually use these midweek episodes to address a listener question or a specific skill, habit, or mindset that will help you own your career. But today we'll be tackling something a little bit different. We're in part 2 of a 4-part series on becoming an investment banker. It's because I get this question a lot, and I thought I would do a little mini series on it to kind of cover the range of answers that I often give, and thought I'd package it up in a little 4-part series. So this is part 2. It's about the unique career paths within investment banking. There are a lot of different avenues you could take. Last week we covered reasons why investment banking is a great career path, and next week it'll be the truth about investment banking, some of the tough things to deal with if you get into the business, and then the last of the 4-part series will be how I became an investment banker. I found that sharing my story usually gives people some ideas and just some thoughts. So as awkward as it is to talk about myself like that, I will do that because people usually are interested in it, and maybe you will be too. So this will be a little bit longer. I try to keep these normally midweek episodes about 10 minutes or under, but this will likely go longer than that. And you can expect in this one about the unique career paths within investment banking, we're going to cut it up a couple different ways. I want you to see the different opportunities, and we're going to look at it from a couple different angles. Now, the divisions, these different angles aren't kind of cut and dry, so things will overlap, and I might get a little bit repetitive towards the end, but I just want to do this so you can see kind of the different opportunities and different possibilities in the business. And just to kind of make sure we're clear, I will be talking about traditional investment banking paths. So I will not be talking about, sales and trading, equity research, foreign exchange, and other areas of a bank or an investment bank that are great career paths that are part of the overall system. But I won't be addressing that. I'll be focusing on a few key product and service areas that are kind of thought of as traditional investment banking and the things that people normally think of. So I'll cut it up in 3 different ways today. By size, the size of firm and businesses you can be a part of. The industry groups, oftentimes the experiences, the opportunities, the career paths are broken up by industry group or specialties, and then products. So what products and services could you be focused on? Let's first start with size. So if you're interested in this space, most likely you've heard of the term bulge bracket, these big firms, the JP Morgan Chases, the Citibanks, Goldman Sachs, Bank of America, Merrill Lynch, and many, many others. These are the full service banks, investment banks. They have everything. They have all that stuff that I won't really get into, like research, equity research, sales, trading, wealth management. I mean, if you think about these institutions as any possible financial service that a business or even an individual, for that matter, could need, that's what these businesses provide. And they also have specific investment banking groups. Most are global firms, and when you think about the transactions they work on from an investment banking perspective, whether it's M&A or capital raising, these are giant transactions, often several $100 million. That's on the low end. So these could be multi-billion-dollar deals that these people and these firms are working on. So if you think that's the large part of, and I mentioned this already, but they are international firms, so they're working on cross-border deals. They have multiple offices across the world, and they're working on large transactions. The next category down from that is still, it's called the middle market, but it's really the upper end of the middle market and the larger firms in the middle market. So Houlihan Lokey, Lincoln International, Harris Williams, Baird, William Blair, Moelis. There are many other firms in this space as well. Now, some are also, just like the large firms, full service investment banks. They have research, they have wealth management, and they have some other components that kind of make up this full service investment bank where they can do public equity offerings and public debt offerings. That Baird and William Blair have those things. But most of these, all of the ones I just named, don't have a bank attached to them. So they're not as large. They're not quite as international and quite as large as the other firms in the bulge bracket category, but they often have many offices. They could have offices across the world. Lincoln International definitely does, and I know some of the other groups do as well. But at the middle market level, the deals could be on the smaller end. So $50 million to $1 billion is just a good range to use. Plenty of transactions fall outside of that range within the middle market, but you can kind of think of that size range as a way to cut up that group. Now, there are a group of firms that we fall in, that Western Reserve falls in, that we still call ourselves the middle market. It's really the lower end of the middle market. Often these firms like us have a single office. You know, we have one office in Cleveland, technically an office in Columbus, but it's our valuation people. So think about this group of firms as the middle market, lower end of the middle market, that are more local, often only having a single office, and often they can be focused on a single service even. So it might just be M&A. Maybe there's some other services like capital raising and valuation. That's what we have. But often many of these firms just focus on a specific thing. And the deals are also a little bit smaller. So they could be 20 million to 500 million is a good range to draw around the transaction size for these firms. If you keep moving down the size range there are smaller shops. If you recall the episode of the podcast where I had a conversation with Scott Mashuda, who founded the company Rivers Edge Alliance. Now, we're getting into firms that deal with much smaller deals. That could be $1 million to $20 million. A 20 would be a large deal for these types of firms. But think of these as your local firms, definitely a single office, but very well connected locally to the small businesses in the community. And some of these firms are not, technically investment banks. They aren't governed by the SEC. They might not have licenses that larger investment banks do, but they fall into the kind of M&A advisor category, and they can do transactions of a certain size, and that's what they're working on. So, and then if you keep moving down there is a category that there are thousands of these, but business brokers still sell businesses. They still help companies buy businesses, but often you're talking about your mom and pop businesses, restaurants, small little businesses that could be as small as $100,000 or something. And there are a lot of these. They're more of matchmakers, I would say, and the quality and variety of services differ widely. So when you cut apart the market in terms of size, that's really what you get. Well, now let's look at when we cut it up by industry group or specialty. As you look at the large firms, the large banks, the large investment banks, they all have industry groups. So if you're interested in investment banking and you have an industry group angle, you have some industry expertise, you might want to consider looking at a larger firm, because they often have groups that cover every industry in the economy, whether that be healthcare, industrial, consumer, technology. There are groups that address companies that fit in pretty much any category. The large firms definitely have that. I would say the bulge bracket for sure, even the middle market, the larger middle market firms, and I would also say even the lower middle market firms have often an angle on a few areas. They may not have every industry group. So for instance, we don't really have a group that deals with, really high tech medical, pharmaceutical. We definitely haven't done much in the pharmaceutical area, but we have groups that deal with a lot of other types of companies like industrial and consumer. There are also, if you're interested in a certain industry, there are specialty firms. So there are specific investment banks that usually are the middle market, lower middle market firms that have very deep industry relationships. They may be they could be as small as 10 people firms. There also could be much larger and have 30 to 50 people, but oftentimes they start with a person, an individual, or a group of people that have very deep industry relationships, and they know companies in the space. They have some prior experience in the space. For whatever reason, they could have come from a larger bank or larger industry group at a larger firm and decided to split out and start their own firm. That's sometimes how these things begin. Or they could be started by a non-banker. Honestly, this happens sometimes where a veteran industry expert comes together with a younger banker, or not real young, but an experienced banker that will help kind of propel this forward as an investment bank. So you pair the investment banking experience with the industry expert, and they can start a firm in a specific area. There are firms that only focus on aerospace. There are firms that only focus on plastics. There are firms that only focus on tech-enabled business services, so marketing services. You can get very specific with these types of firms. So if you had an interest in a specific area, call it plastics, you could type into Google plastics investment banking, and oftentimes you will come up with a firm with a very niche specialty area. And you'll find the big firms when you do that too. But if you drill down, you can often find small firms with really specific industry expertise. So if that's something that you have and you're looking to get into the industry, or take advantage of those skills, that could be an area where you want to check that out. All right, that's the industry groups. If we cut it a different way, by product focus, again, the larger firms have all of these things. The smaller firms often specialize. But if you think about mergers and acquisitions, that is kind of one of the big areas that people think about when you talk about investment banking. We're advisors on transactions when a company is being sold or when a company wants to make acquisitions. The large firms often have a dedicated M&A group. Even the larger regional firms, the mid-market firms at the larger end, have oftentimes dedicated M&A groups. So they're mergers and acquisition specialists. Some of these transactions get very technical, get very complicated in their structure, and so they have dedicated groups that can help make sure that those transactions are done in the best way. Many small firms only do M&A. There are many firms that only do M&A. They don't have capital raising. They don't have valuation. And that's a lot of the firms in that lower end of the middle market. And if you dig down even further, many of those exclusively M&A firms only focus on sell-side M&A. A big thing in this business is certainty of closing. So we take on these transactions. There's always a risk that they don't happen, and our compensation is tied to whether they happen or don't. As a firm, not just individually. And so many people, if they choose to focus on one or the other, they focus on sell-side M&A because I always use the analogy, if you have a house and you want to sell it, it's up to you whether you do or you don't. Yes, terms and conditions and price, they're all important, but you could sell it tomorrow for $1, right? You own the asset. Well, if you walk down the street and knock on a neighbor's door and say, I want to buy your house, you have zero control whether they say yes or no. There's nothing you can do to make that happen if the seller isn't ready. And so that's why oftentimes people, if they're going to focus, they focus on that sell side of the M&A business. Now, a lot of other firms, though, do have buy side M&A, including the large firms. It doesn't really matter. At the larger end, they often will, larger deals will have both the buy side and sell side advisor. The buy side is to, be the advisor on these large transactions. They're complex. They're large dollars. There's a lot of structuring to be thought about and figured out. So there's usually an advisor on both sides. At the smaller end, there's not as often buy-side advisors, but we have developed an acquisition advisory business where we effectively act as an outsourced corporate development group. So we help businesses go out and find acquisition targets and actually develop a pipeline and then help negotiate those transactions. So not as many people do that, but there are other firms out there that do that. And some just advise on the transactions once it's set up. So we'll go out and find businesses to buy and develop a pipeline, kind of like a salesperson would develop prospects, whereas other people, they can advise on a specific transaction, but they might not go find a bunch of alternatives. So there's a variety of things, a variety of opportunities you can think of when you're looking at the M&A piece of investment banking. The next I'll look at is two different forms of capital, debt and equity. And if you think about debt capital markets, you can listen to episode 001, actually, of this podcast, my conversation with my buddy Bob Loria about his current role in debt capital markets. And there are kind of a couple ends of the spectrum here. If you think about the large firms, like where he is with Piper, you're talking about public bonds, high yield, debt offerings, big chunks of capital for larger companies, could be larger middle market companies, but also very large companies use the services of either these the higher end of the middle market firms or bulge bracket firms to raise capital and round out their balance sheet. The other end of that, which we do participate in as well, is the private debt capital fundraising financings. So we can also raise capital for companies on the lower end of the middle market, but it's not going to be a public bond offering where they get traded on exchanges. It's investment, private equity, private capital investors. There are debt funds out there, just like there are private equity funds, and there are specific investors that invest in private companies that can help them accomplish the same things that a large company can get. For the most part, it's different, but at the lower end of the middle market, you can still, help a company develop its capital structure and figure out how to best finance the business. But it's, different size transactions. So at the larger end, you have kind of big bonds, high yield offerings. It runs at a very global scale. But there are often lower middle market firms that can also do some private company capital raising. Equity capital markets, the same thing, really. If you think about that conversation in episode 61 with Chris Malik, he talks about his experience in equity capital markets with IPOs, follow-on offerings. The large firms, he's at KeyBank. It's a middle market firm, a regional bank, and all the way up to the bulge bracket can do that. You really need the equity research and sales and trading to be able to do IPOs and follow-on offerings. Firms like Piper, Baird, William Blair have those things. If you think about firms like ours, the lower end of the middle market, we don't have that infrastructure, the sales research, equity research, sales and trading to support the whole public offering of equity of securities in that way. We have the licenses, we could technically do it, could legally do it, but we don't have the infrastructure. But at the lower end of the middle market, what we do have is the ability to raise private equity for companies. Now, it could be the traditional private equity funds that you might be thinking of, but there are also very specialty investment vehicles, investment firms that look at certain industries. So our job is to know our client, know what the best capital structure is for them, and then know the investors out there, and then match them up with our client. Well, I hope that was helpful. We definitely covered a lot of ground. I tried to cut up the industry in a variety of ways by size of firm and size of transaction, by industry group and industry specialty, and then by the products and services provided, whether it's M&A or equity or debt capital raising. If you have any questions, definitely let me know. Shoot me an email and let me know what your questions are. Happy to answer them. And I hope this was helpful. I'll talk to you again soon. If you enjoyed this episode and want the complete mixed media mentoring experience, head over to financecareerlaunch.com and click that big blue button to register for your membership at no charge.